As we navigate the complexities of the global market landscape, one thing becomes glaringly clear: the world is experiencing a perfect storm of economic uncertainty. The 2025 stock market crash has left investors reeling, wondering what exactly triggered this downturn. At the forefront of our concerns are the implications of the latest tariffs imposed by former U.S. President Donald Trump. As we know, Trump's administration was known for its aggressive stance on trade, and his tariffs were always a point of contention with international partners. The current turmoil is a direct result of these tensions, which have been simmering for months. But what's particularly concerning is the impact this has had on global markets. The Dow Jones has plummeted, with stocks experiencing their worst week in years. This is not just an economic phenomenon, it's also having a profound effect on individual investors who have seen their portfolios decimated overnight. The question on everyone's mind is, what's driving this downturn? Is it the rise of China as a global economic powerhouse? Or perhaps the ongoing trade wars between major economies? The answer lies in a complex interplay of factors, but one thing is clear: the world has entered an era of unprecedented economic volatility. One of the key drivers behind this turmoil is the changing nature of international trade. The post-UW order, which saw America as the dominant global economy, is slowly coming to an end. China's rise has brought about a new era of multipolarity, where no single country holds sway over the global economy. This shift in power dynamics is unsettling for many investors who have grown accustomed to a more predictable world. The 2025 stock market crash also highlights the dangers of complacency. Many experts predicted that Trump's tariffs would have little impact on the U.S. economy, but this latest downturn suggests otherwise. The reality is that trade tensions are always present, and we should be prepared for them at all times. Another key consideration here is the role of monetary policy. Central banks around the world have been struggling to keep pace with the changing economic landscape. As governments seek to stimulate growth through monetary policy, they're facing increasing pressure to balance fiscal sustainability with the need to support economic activity. The current turmoil highlights the challenges of navigating these competing priorities. Looking forward, it's clear that investors will face significant challenges in the coming months. With global trade tensions set to remain a major concern, we can expect volatility to persist for some time. However, it's also crucial that investors recognize this as an opportunity for long-term growth. The key is to adopt a contrarian view and take a step back from the market chaos. Investors who have taken the time to educate themselves on the intricacies of global trade and monetary policy will be navigate positioned in these uncertain waters. They'll also be more likely to spot opportunities that others are missing. Ultimately, understanding the 2025 stock market crash requires a nuanced perspective that takes into account the complex interplay of global economic forces. By staying informed and adapting our investment strategies accordingly, we can mitigate the risks associated with this downturn and position ourselves for long-term success in an increasingly uncertain world.